Well, Shabana, it's really nice to catch up with you again. So, look, there was big news out of the UAE this week, really big news. Tell us a little bit about this, because I'm sure it's keeping you very, very busy right now.
Absolutely, Rodney. Lovely to see you. And you're right, there was, very big news, groundbreaking news, in fact, on Monday. So the 31st of January, we had an announcement from the Ministry of Finance here in the UAE that for the first time, businesses will be subject to a federal corporate tax.
Hmm.
It will apply across all Emirates, and it will apply to all businesses that are undertaking a trade or any kind of commercial activity in the country. There are some specific details on this as well around, how this interacts with various incentives that we currently have. But I think in terms of the key headlines that people have been made aware of, it's important to note that there's a very competitive rate that's been proposed. So effectively, it's almost like a three-tiered rate. So you have a exempt threshold if you are earning taxable income that's around 375,000 dirhams, which is approximately $100,000.
Mm-hmm.
But anyone that's earning that has taxable income above that amount, they would then be subject to a 9% corporate tax rate. There is a slight difference with that, and that is there's an additional rate where if you are part of or considered a group for Pillar 2 purposes, so the global minimum tax, then you would be subject to what the ministry has called a different rate. So they haven't said what that rate will specifically be, but it's obviously likely to follow what we have in Pillar 2, which most people are expecting to be at the 15%.
Fascinating, Shabana. And when is this taking effect from?
Yeah. Okay. So it will take effect for officially the first effective date is 1 June 2023, but it's only relevant for accounting periods that start on or after that date. So for most groups that follow a calendar year end, then they would be subject to the corporate tax in the UAE from 1 January 2024.
Okay.
So they've given I would say a reasonable amount of notice for businesses to prepare, given we're, under 2 years away from that date for most groups. And that was the intention. There was a lot of lessons learned here in the country following the introduction of that. And I think this is a great example of the UAE being as business friendly as it can be, and obviously encouraging stability and a readiness period for businesses to really prepare for the changes.
Interesting. And I can imagine it's still not a lot of time for people to absorb something as significant as this. So I have to ask you, I know the UAE has many free trade zones or special economic zones. What is anticipated to happen with those?
Yeah, it's a great question. And I think here the fact is that the UAE is very cognizant of that fact. They've made a number of commitments, particularly at the Emirate level, where they promised tax holidays or preferential rates, 0% rates for a number of free zones. And they're honoring them, right? So what they've said is if you are in a free zone, and provided you do not undertake business with the mainland, so anyone outside of the free zone essentially, then we will honor that commitment and continue to give you that tax holiday or that 0% rate that was originally promised. So again, I think this is another example of the UAE, progressing, moving forward, bringing in corporate tax in line with the tax transparency and, agenda, the global agenda, but also trying to honor the commitments that have been previously made and continue to be an attractive hub, right? So when you and I spoke before, we spoke about how the UAE has those ambitious growth plans to continue to be an investment hub and encourage trade. And that's clearly one of the reasons why those free trade zone exemptions remain.
Really interesting. So that has to be comforting, but I can imagine just over the course of this week, you've been talking to many, many businesses about the breadth and width of this new corporate tax law. As you talk to folk, and as they struggle to think about, well, what should they do next? What are you suggesting to people that they think about as key next steps to understand the implications of these rules?
Yeah, absolutely. And I think this is playing on a lot of people's mind because you're right, it's such a huge change from not having any corporate tax whatsoever to obviously moving to this system. And I think a lot of groups, they've not been used to this. So therefore they've made decisions in the past, whether it's around, transfer pricing and not really charging for management fees, for example, or interest on loans. And because it's never really mattered from a tax perspective in the UAE. So I think we can group what businesses need to do, and maybe in three different buckets. The first one is really around doing an impact assessment to try and understand, okay, what does this mean for my business? Because even if the headline rate is 9%, or let's say 15% if you're a part of a pillar 2 group, it's really trying to understand, well, if I've got free trade zone exemptions, if I'm in an asset intensive business, potentially there could be some capital allowances that I could take account of. So what's the real effective tax rate for me going to be? So I think a number of groups are in that phase where they're undertaking that financial impact assessment. The other bucket, the second bucket, is really around from a compliance perspective. What does this mean? Do I have the right talent, the right skills in my team to be able to take account of this tax going forward? And the whole, a lot of clients are also interested in like the grouping provisions. What can I do with existing losses? So this is all coming under this compliance piece as well. And then the third bit, I'd say, is more around, okay, do I need to restructure anything? And when I'm looking at my group, do I need to take an entity rationalization, or do I need to, am I fine to carry on as usual? And actually, I've got one more bucket, which is linked to the other three, and that is, when I'm doing my impact assessments, have I got the right data and the systems? And this is where I think it becomes much more of an accounting and a systems conversation rather than a tax conversation. And you can imagine, Rodney, that's obviously a lot to consider, given the news was only on Monday. So I think a lot of groups are welcoming this readiness period to try and get some of their affairs in order to make sure if they are going to pay tax now, it's obviously at a efficient level.
Well, that's fascinating, Shabana, because you talk about those buckets, but there's a lot in those buckets.
Yeah.
It may be a year and a bit away, but if you're going to restructure a business, these things take time.
Yeah, absolutely.
And then your point about thinking through the data, the upcoming compliance, and the people and resources necessary to actually just comply, let alone restructure, is a big one. So no wonder this is keeping you busy. It's big news, and it's potentially very impactful for folks. So, Shabana, I know you're rushing between meetings, but I had to catch you on this. So just thank you for your time. It was good catching up.
Likewise. Thanks, Rodney.